All right, everyone. It's Thursday afternoon. It is just about 4:30 in the afternoon, so we're coming up on 3 o'clock Arizona time, 5 o'clock Eastern. Wanted to get this out early in the afternoon just because I've got some errands I have to run before my trip to Dallas. What I did want to do, though, was talk about the entry that occurred early this morning. And in last night's video, I talked about an entry at 99.78. Hopefully you understood that I was stressing the momentum nature of that kind of trade. So let's talk about this. You can see here 99.78 was right about the top end of the move. In fact, I think this this 15-minute bar went exactly 99.83. So remember, on disc number 5, and actually on disc number 3 and on disc number 5, where I'm talking about confirmation techniques, and Mike this morning was good enough to tell me that the advanced tactics are not on disc 6, and so I apologize for that. I've actually got to look at my notes to see where that was. I've got to check that. So disc 3 and disc 5, we have the confirmation techniques. So if you were looking to enter at 99.78, you want to wait for the 15-minute bar to close, that it breaks through that level. Because remember, we want momentum. We want to see the market pushing in our direction. So it's not enough just to have price trade above our level. We need to have price trade above our level, and then we need the market to prove itself. So we're waiting for the market to come above this high. And it doesn't do it. So the market does not go above the high. There was no trigger for a confirmation type of entry, number one. So what if you weren't waiting for confirmation and you just jumped in? Because you're saying, well, Mac, you said to get in at 99.78. Well, okay, not exactly, but let's not bicker about that. Let's say you did enter at 99.78. Remember what I did say was that if you see the market turn around on the very next bar, get out of the trade, right? Because the momentum is stopped. Well, you see that the very next bar closed down, the next bar, the next. So for the next hour or two, 3 hours actually, the market just sort of gradually trickled its way down. So even had you gotten in right at 99.78, this is a stellar example about how a sideways market, now remember it's a sideways market on the daily, sideways market on the 4 hour. On a sideways market or a counter trend trading market, these types of moves are very, very common. This is why we've got to be careful with the autopilot trades. So let's kind of talk this whole thing out. Now, you can see here, if the market pops up, goes up to 99.78, right into resistance, which, by the way, if we kind of swing over here to the daily bar, you can see that it's coming into the old high here, old high there. There's the breakout area. Okay, so it's coming into resistance. First time up, it just stops. And then what do we get? We get a little dipper. Now, this is where you've got to be careful, because the ideal little dipper is when the market comes down very, very quickly. And this is one of those times where the market just doesn't make it very easy for you.